Hello, everybody. Good afternoon. I'm Marriam Rusishvili, CEO and co-founder of Quick Cash. And what is Quick Cash? It's first algorithm-based credit scoring and loan underwriting platform for small businesses. So we use big data analytics and alternative scoring in order to tackle access to finance gap in developing countries. And this is our powerful team behind Quick Cash. So we're a group of 5. Co-founders have combined 40 years of experience in developing banking, in government, and in international organizations, managing mega projects. And we have MPAs from Columbia University and Fletcher. Also, I have worked on MSME problems in overseas, in World Bank, and CIF, which is private equity firm dedicated to developing countries, in DC. And in my latest capacity, I was head of the strategic projects department for microbusiness in second largest bank, TBC Bank in Georgia. So our global advisor, Chanchal Gupta, is vice consul for trade and UK trade and investment, and he is also founder of Reverse Financial, which was one of the first online platforms for small business lending. Credit risk advisor George has 10 plus years of experience in microfinance, commercial banking, and he's CFA candidate. And we have in-house IT, which is, skilled in front-end as well as back-end engineering. So what inspired us to create Quick Cash platform? There are 3 main problems that we examined. This is that operational expenses of underwriting the loans for traditional loan lenders was 6 to 8% in developing countries. It takes 3 to 4 weeks to process the loan application, and 40% of our Quick Cash end clients or MSMEs are underserved by banks and MFIs due to very high collateral requirements. And moreover, limited access to financial resources due to underdeveloped capital markets in these countries. So we created Quick Cash platform, which offers high-tech automated underwriting in less than 30 minutes, low-cost processing, which is 8 times less expensive compared to like traditional loan lenders, and we have no collateral requirement for our end clients, MSMEs. Our expansion opportunity, as you can see from the slide, we look at Ukraine and Baltic states. The rationale behind that being that we need digitalized data and governance services in these countries. And expansion strategy is white labeling the Quick Cash platform to our partner financial institutions. This is like the screenshot from our prototype of Quick Cash platform, the registration page. So small business registers online with its company ID, then platform scores its business activity in less than 30 minutes, and platform approves the threshold for the credit and disburses online. So what is our advantage? Our advantage lies in strategic partnerships with our big data providers. These are unique plugins through which we extract information from these big data providers. These big data providers are following: National Bank of Georgia, Public and Private Registry, Revenue Service, Credit Info, Credit Bureau, and Georgian Statistical Office. So available market, as you can see, the SME loan disbursement only in Georgia in 2015 was 1.8 billion, and $500 million was MFA loan disbursements in 2015. And it has a very positive trend in terms of growth, the loan disbursements for SMEs. As of today, in Ukraine, SME loan portfolio is 61.5 billion. We have very diversified business model to have several revenue streams. First is risk-insured risk-insured credit scoring, in which case we derive 8% based on the loan volume, and simple credit scoring, and in that case we get fixed $5 from our partner institutions. Key milestones: we raised $30K in 2016, which was used for development of the platform. We need 45 additional for launching, and we will need in 2017 500K in order to validate the platform and create the traction. We will break even with 925 end clients and get the net income of 350K by the end of 2017. 2018 will be the year of our expansion or cooperation with foreign banks. Net profit margins and net income margins, gross profit margins and net income margins are positive starting from the first year based on our projections, of course. We need investment of 545K, and this will lend us net income of 2.2 million over the course of 3 years. This is the use of funds that we envisage. So disbursements will be the chunk of using the money that we ask for, our own disbursements to validate the platform, and it will, we will need 500K for that. The rest, or 45K that we ask for to launch the platform, will go on platform mobile app development, 20K. The rest goes on marketing, operational expenses, and legal. And additional credentials for our company. We have been chosen as Alpha Company by Web Summit 2016, which is like huge tech summit in Europe. And Quick Cash is also finalist of Seed Stars World from Tbilisi, Georgia. And this happened only after 6 months from idea generation of Quick Cash platform. Thank you.
Now, is it the expectation that you're going to partner with some other financial institution for the source of capital to lend?
Partially, yes. So first, we want to validate the platform, and that's why we need 500K to do our own credit scorings and then disburse our own money. But eventually, this will be like a white label platform, yeah? So we will partner with institutions, so we will use their own money, and they will use our scoring underwriting processes. So this is the strategy that we look for.
And have you, with any banks so far, have you found any banks willing to fund the loans as quickly as you want them to be funded?
Actually, I forgot to mention, yes, we have negotiations with 2 banks. First in Georgian market, of course, and 1 small MFI. So, I mean, of course, we are in the process of setting up the partnership structure, the way it will look like in several months, hopefully.
Scoring is critical.
I will explain. Scoring.
What is unique?
This is the unique, actually.
What is unique in your scoring?
Unique are the so the plugins that we use are the arms through which we will extract information for different sources. The sources I mentioned, national, for example, I will give you examples. I cannot give you all the information in terms of like the parameters.
No, but sources of information should be available to all players on the market, like credit bureau.
No. It's open. It's not like prohibited for others to use. But this unique is our metric. So we use 15 different parameters with sub-parameters and with different weights from these 6 sources that I mentioned. For example, non-performing loans from National Bank of Georgia, example, one of them. From revenue service, different reports, we extract information regarding the taxes, regarding the net income, and so on and so forth. From public registry, we verify the company itself through public registry, shareholders. From private registry, we verify the company, and so on and so forth. Credit, for example, from statistical office, we get the information regarding the growth trends per subsector in which this SME operates that we will be scoring and disbursing the money. So this is like a matrix of 15 different parameters with sub-parameters and with different weights. And this happens like, I mean, client doesn't see anything. This happens in back end, yeah?
So how long does it take you, and how many loans do you have to put out to show that your metrics actually predict defaults?
How many? Okay.
How long? So do you have to have loans outstanding for a year, 2 years?
No, not 2 years. This is like short-term loans. Its maximum is like 9 months, and on average it's like 4 months. So that's why I mentioned about 2017 will be critical in terms of validating. That's why we need 500K, so that we will examine the scoring metrics, and then this is a dynamic metrics. We can change weights, we can add even more, and so on and so forth.
So the $500,000 will be spread over how many loans?
It will be the portfolio based on that will be around 800,000 portfolio, and then the average loan that we envisage is around 2,000 USD, the average loan. So it's like starting from 2,000 till 20,000. This is the range that we are thinking about, and actually it's already operational. It's like small business loans, not very small for Georgian market at this time, but again, this is dynamic. We can increase, we can change the weights, and we can increase the lending threshold.
Can I ask a question? It's a technical financial question. Are you splitting, are you brokering the loan and funding it yourself and then selling it wholesale? I don't know if I'm asking this correctly, like a mortgage broker. They're not holding it, they're just, are they holding it?
And then the institutions are using it as a platform, and the institutions will hold it.
In case of the white label, in case if we will be disbursing, of course, no other financial institution will be involved. We will be scoring, we will be originating, acquiring, underwriting, and then disbursing, of course, and then retaining the loans. And in case of overdue loans, we will be the ones who will be extracting it.
And what are the
with the help
duration
of
of
other
these loans?
Sorry?
What are the duration?
Duration is the maximum 9 months. So basically, this is working capital loans. It's only working capital. It's not used for acquiring fixed assets. That's why we don't require collateral.
And you said earlier, so somebody might have asked this already, but no collateral?
Yes.
And it's because you're just looking for relatively high credit scores? No.
Not because of that. Because it's working capital, and because this is like a growth capital for small businesses. That's why we want to remove this obstacle from small businesses, and we don't require collateral from them. Because this platform will give us opportunity to underwrite the loans and approve the credit thresholds in a way for us not to require collateral. Collateral is easy, to require.
It's not a
It's an
receivables
underserved
loan.
market.
But,
because
sorry?
It's an underserved market because the banks will not loan to these people
No.
because they have no collateral. So you're filling this gap.
Yes, filling the gap. And plus, one more thing. I have managed the Produce in Georgia, if you have heard about this. This is like a mega project of the government. It was subsidizing interest rates for small and medium businesses. And we had huge problem. We wanted to subsidize, but half of these small and medium companies going to the banks, they were not able to get the loans. And the reason was that they were overburdened with collateral, overburdened. And even if they were good, their traction was good and their growth parameters were good, they couldn't do anything, They were already overburdened, and the bank requires collateral for that. And that was really a huge issue.
Philosophically, the reason for collateral is because there's some losses.
There is risk, yes.
And so why is your system any different? Why do you just can live without the collateral, without additional risk?
Why don't we require?
Yeah.
Because again, it's working capital. Our costs are very low, and spread is high, for which we get, big profits, and this will balance the losses. This will balance the losses, and we already have a default rate of 7% in our projections.
Got it.
Yeah, so I assume part of your working capital, your metrics for risk is what percentage of receivables in the working capital calculation that you'll loan against. You won't loan against the full receivable amount. Because in the U.S., working capital loans, receivable loans, are typically 60 to 80%, depending on the risk criteria of the company itself.
And again, how you balance risk, Your average percentage rate over the year is high. Let's look at cabbage. But cabbage works in developed countries only in developed countries. Cabbage's average loan rate is very high compared to other loan providers in US, but it's still working and it's amazing. On deck, for example, the same. That's how they don't require collateral, but they balance the risk by asking for more interest rates. And these
Another way to do it.
companies are also okay with that because they need cash tomorrow to grow. And they're okay with paying more in order to get it now.
Sooner. Yeah, get it sooner.
Get it now.
Yeah.
Very good.
Thank you.
Thank you.
Thanks.